Coming up on Business Incorporated, African Development Bank falls World Bank statement on Africa's debt. And Sudan's annual inflation rate hit 64.28% in January due to increases in price of food and drinks. And Airtel Africa announces results of Malawi IPO. I got to have you on the program. I am busy at Debayo. Let's kick off with the numbers coming from the stock markets in Africa, which were largely mixed at intraday. Here in Nigeria, the offshore index appears to be on the path to recovery with a marginal increase of 0.02% at intraday. In South Africa, the JSE index was traded sideways, down 0.03%. And in Egypt, the blue chip index is closed for the week, but it edged up 0.1% on Thursday, supported by top lender Commercial International Bank. Kenya closed down 1.68% also on Thursday. And most major Gulf markets retreated on Thursday as weak corporate earnings continue to weigh on investor sentiment, while Dubai bucked the trend supported by Dubai Islamic Bank. The Abu Dhabi index is 0.56%, hurt by a 0.9% fall in First Abu Dhabi Bank. In Dubai, the index reversed its course to close up 0.14%, with Dubai Islamic Bank rising 0.7%. Qatar's index dropped 1.07% as most of the stocks on the index declined, while Saudi Arabia's benchmark index was down 0.52%, led by a 2% fall in Saudi basic industries and a 0.5% dip in Al Rajhi Bank. European markets were mixed on Friday morning as investors monitored China's coronavirus epidemic and a slew of corporate earnings. Investors are also digesting the just-released German GDP data. Well, let's talk to Chelsea Delany from the Frankfurt Stock Exchange. Well, Chelsea, the German economy posted zero growth in the fourth quarter, according to data released today. Now, is this stagnation a surprise at all?
It's not a surprise, and it's actually, from what I hear, a bit of a relief to a lot of investors. A lot of investors had been expecting the economy to actually contract in the fourth quarter after a number of really dismal industrial reports over the past couple of weeks for December. So I think for some investors, no growth is better than negative growth here. But this really just confirms the outlook for the German economy remains quite grim for the rest of this year. The industrial sector remains really mired in the worst recession in 10 years. It's struggled with trade tensions, Brexit, and also now with the outbreak of coronavirus, which is really hurting a lot of German industrial companies who have supply chains in China. So that could certainly add to more pressure. And this report also highlighted a decline in private consumption, which has been really the key driver of the German economy over the past several months as the manufacturing sector has slowed down. So that also could be turning negative as well, which would be a much bigger problem for the economy at this point. And the conversation today really is about whether Germany is heading for a technical recession in the coming quarters.
Well, let's talk about dismal reports from automakers Renault and Nissan, with the companies who have been working together in an alliance for more than 20 years, both posting worse than expected results and, of course, slashing dividends. Could this threaten the alliance?
The alliance between these two companies has already been really on the rocks since the head of this alliance, Carlos Ghosn, was arrested in 2018. He's now fled to Lebanon and is involved in a lot of cases in Japan still, but this really put a lot of pressure on the alliance, and there have been a lot of reports, a lot of speculation that it was heading for a breakup. Especially given the fact that for Renault, especially, they own 43% of Nissan, and they're really struggling with the decline in profits they're getting from that alliance. So I think a lot of shareholders are having to question whether it really makes sense for these two companies to be so tied together. But I think the companies themselves are really trying to underline how important the alliance is for them, especially now that they're struggling so much financially. They can really share costs. If they say it makes them much more efficient. They can share factories. They can share research and development and parts for cars, things like that. So I think they're really trying to send that message to the markets that they need to be in this alliance right now. Whether that is going to convince shareholders is still to be seen.
Wait to see how that plays out. Now, Tesla says it would raise about $2 billion by selling new shares, and that's just 2 weeks after the CEO, Elon Musk, said that the electric car maker didn't need to raise new capital. What's with the sudden change of heart?
I think for Tesla, it makes sense for them to be selling more stock right now, especially if you just consider the real fervor around the Tesla stock. It's up almost it's almost doubled since the start of this year. We've seen this huge run up. So clearly there are a lot of people who want to buy Tesla stock, and that's really when you should be selling stock, is when everybody wants to buy it. So it makes sense that they are selling it. I think for investors, it is a little bit of a shock, and they have had concerns about spending at Tesla. Tesla is always in the midst of about 1 million different projects. So I think investors want to see more discipline among Tesla management. But I think investors who are interested in buying this also have to consider if it's a good deal, just given how high the valuation of Tesla is right now. It's now valued as the second biggest car company in the world, even though it's only selling about, it hopes to sell about 500,000 autos this year. That's far below the numbers that a company like Volkswagen, which is now smaller in market value, is selling. So I think investors are potentially having to think of whether this is an overvalued stock.
Thanks, Chelsea, for those updates, and do have a wonderful weekend.